You are listening to the American edition of The Voice of Russia, and I'm Justin Mitchell. It has been a rough decade for homeowners in the United States, starting as early as 2005 and peaking with the housing crisis in 2008 and 2009. An estimated number of as many as 10 million people have been displaced by foreclosures brought on by bad mortgage products pushed by the major banks. Something people often don't realize is that homes are more than just a source of shelter. They are also a source of wealth. And as the housing crisis happened, millions of families saw their wealth wiped out. African Americans lost 53% of their wealth, according to the Pew Research Center. Latinos lost 66%. But these days, we are supposedly in the midst of a housing recovery. President Obama has trumpeted rises in home prices, and industry experts are saying a lot of the same things. However, a lot of this recovery is driven by investor purchases. And now we're hearing that perhaps these investor purchases are not going to work out well for America's homeowners in the long run. To talk a little bit more about this, we are joined by Laura Gottesdiener. She is the author of the recent book, A Dream Foreclosed, which is available now from Zuccotti Park Press. She also wrote the recent article for Tom Dispatch called The Empire Strikes Back, How Wall Street Has Turned Housing into a Dangerous Get-Rich-Quick Scheme Again. That is on Tom Dispatch and is also available on the Truth Out website. Laura Gottesdiener, thanks so much for joining us today on The Voice of Russia.
Thanks for having me.
So, investors have been buying a lot of foreclosed homes, apparently. Can you elaborate on that a little?
Sure. So we've always had small-time mom-and-pop investors in the single-family rental market. What we've never had in the entire history of this country is institutional investors, big private equity firms, big hedge funds, essentially the Wall Street guys, getting into the single-family rental market. But what they're doing right now, and it's really difficult to see it as anything other than a massive land grab, is going around to the cities where housing prices fell the hardest, really crashed the most, and buying up thousands, sometimes tens of thousands of houses in that city, pushing the value of these prices up in the city, and then turning around and renting out these houses, oftentimes right back to the same families that were displaced by the foreclosure crisis.
Okay, your article focuses on one company in particular called the Blackstone Group and their subsidiary Invitation Homes. Can you tell us a little bit about them and what they're doing?
Sure. So the Blackstone Group is one of the largest private equity firms in the world. It's generally regarded to be the largest. It manages $200 billion in assets. I mean, it owns parts or whole of dozens, if not hundreds of companies around the world. But what makes them notable today for my article is they've also become the largest owner of single-family rentals in the country. So in the last year and a half, they've spent about $7.5 billion buying up around 40,000 homes around the country. And the thing that makes them particularly interesting is that they're not just hoping to make money by renting these homes back to families and simply receiving their rental checks. What they've actually developed is a pretty scary new financial product called a rental-backed security. And for anyone who was paying attention to the last crisis, it's going to look a whole lot like the mortgage-backed securities that got us into this mess in the first place.
So we basically, Blackstone Group, if I'm not mistaken, is also some of its shareholders are some of the major banks involved in the housing crisis, right?
Right. I mean, you're spot on with that one. So it's a public company, and many of its major shareholders, many of its major institutional owners are, the Wells Fargo, the Bank of America, the Citibank, the Deutsche Banks of the world, all of the guys, the JP Morgans, all of the guys who got us into this mess in the first place. So what we can really see is that through Blackstone, these banks have once again figured out a way to profit off of the very crisis that they created.
All right, let's talk about this rental-backed security. I'd never heard of it before until I read your article, and it's fascinating and kind of terrifying. How exactly are these securities structured, and how are they the same and different from the mortgage-backed securities, which played a large role in creating the huge housing crisis that almost tanked our national economy in 2008?
Sure. So, it's not surprising that you haven't heard of it because, the first one developed by Blackstone just came out a little earlier this month. That said, it's been sort of the rage in the financial press. Everybody wondering, will they really do this? Will they really do this? And how is it structured? It's pretty simple, actually. For this very first bond, Blackstone has taken the rental payments, the monthly rent checks that you and I would probably just put in the mail and mail to our landlords, and they've securitized 3,207 of those. So 3,207 homes across the country. Now their rental payments are being securitized and sold as a bond to investors all around the world. What does this do? For one security, not a very big deal, but what we saw was that investors were desperate to get this security. So now not just Blackstone, but all the other institutional investors in this game have said they want to develop similar securities. So we could really see a future not too distant in which tens of thousands, if not hundreds of thousands, of renters across the country are living in homes where their rental payments have been securitized and sold on Wall Street. What are the implications for this? Well, it's pretty simple. If Blackstone and these other institutional investors don't do a good job marketing and managing and selling the security, let's say they overestimated the cash flow, let's say one of these blows up, we could see thousands of people be evicted from their homes, whether or not they ever missed a rental payment. The success of the security is, not fully dependent on a renter. So the major way that it is a little bit different than a mortgage-backed security is that mortgage-backed securities, which, as you mentioned, really did lead up to the 2007-2008 housing crisis, there was at least this assumption that homeowners had defaulted on their loans. Often that was not even correct, that the banks had botched the paperwork, that they had lied. But there was usually the assumption that when homeowners were being pushed out of their homes, it was for some reason. And that wasn't usually even true. But now we're seeing that renters may or may not be evicted, whether or not they've done anything wrong. It's a very scary development because, once again, we're seeing that Wall Street is holding the key and all the cards in our daily life, and we have very little control over what happens to us.
Yeah, it is rather strange that renters could pay their rent dutifully. I think you spoke to Dean Baker of the Center for Economic and Policy Research in your story, and he mentioned that the tenants might lose their places not because they've fallen behind, but because the landlords have fallen behind. I was just wondering what exactly...
landlords being Blackstone.
Right, exactly. So, by falling behind, what does that mean exactly? What could happen that could potentially cause Blackstone to fall?
Right, so that's a great question. So the way, a bundle works, the way you could bundle these rental payments into a security is if you take thousands and then you bundle it into a single bond of, and then you sell that off to investors. And essentially, you're selling to investors a piece of paper that says, give me money now and I'm going to give you this rental cash flow later. Pretty simple there. The problem is, if Blackstone doesn't end up having the cash flow from rental checks later, that whole bond could blow up, and the mortgages on these underlying houses is the collateral, which means these actual homes could then be repossessed by investors. So paradoxically, actually, what this boils down to is a really simple question. Is Blackstone going to be a good landlord of single-family rentals, or will it not be? And the troubling thing is, across the country, increasingly the reports coming from tenants is that they have not been a very good landlord so far, and there's really no indication that they're going to get any better. So if they're not a good landlord, they're not going to be able to keep up the occupancy rate. They're not going to be able to keep people in these houses. They're not going to be able to continue to market them and to rent them to new families. They're not going to be able to manage the turnover. They're not going to be able to manage the repairs and the maintenance, all of which means down the line they may or may not be able to have a successful security.
All right, so suppose this rental-backed security idea takes off. Suppose everyone jumps on the bandwagon and we suddenly have this boom in this hot new security. Tell me, looking from where you are as someone who's obviously reported on housing a lot, is the landscape in the investment world different now to a point where this rental-backed security would not be able to tank the economy in the way the mortgage-backed security did before? Are there safeties in place that make people more safe these days?
That's a good question. There are, in terms of safeties and regulation, there really are not any right now for the rental-backed security market, in part because this doesn't exist. This is the first time, this November is the first time.
Oh, okay. So the
in
regulations
history.
for the mortgage-backed securities wouldn't even apply to this then?
No, it's a
Wow.
different
Okay.
financial product.
Mm-hmm.
And I think the thing that is worth noting is that this will be a smaller market, likely, at least in terms of the amount of homes right now. Institutional investors hold 200,000 homes across the country, and they plan to buy more. So it's a number. It's a considerable number. It's not the relative share of the market that we started to see mortgage-backed securities encompassing when it was tens of millions of homes, hundreds of millions of homes. So that's important to say. But in terms of regulation, no, it's not in place. This is a new financial product, and it bears striking similarities to the last financial product that got us into the mess in the first time. But banks are more consolidated than ever. There's no reason to think the government has increased enforcement mechanisms that it didn't have in 2006.
So we're basically looking at what was once a home ownership market is now a home renter market, and a lot of the same people are being put in a very similar position by the banks. Would you say that's an accurate reading of the situation?
I would say that's an accurate reading. And I think it's important to say that it's not just putting more families, it's putting more families' daily lives and existence at the whims of the banks. And so what was most striking to me in interviews with tenants was that tenants of Invitation Homes, the subsidiary of the Blackstone Group, were reporting very similar automated type shenanigans happening in their experiences with Invitation Homes that many, many homeowners were saying happened with their experience with their mortgage owners, with their banks. So you heard people saying things like, I was just trying to pay my rent and they wouldn't accept the check, or they made a mistake in their withdrawal and now they're putting these late fees on me, or that, they call the maintenance hotline, they try to get somebody on the phone, nobody answers, they tell them to go online, the website doesn't actually produce any results. So what we're really seeing is this increased automation, this increased sort of corporatization of the rental market, which really made it very, very difficult for homeowners across the country to get any sort of justice in the last crash. It doesn't seem like we're going in the right direction this time around.
Yeah, for my last question, I was going to ask you, what does this tell us about the progress we've made since the last housing crisis and what housing is looking like for Americans on the ground now?
It's a little depressing to me because I've been covering, people who are organizing against displacement and foreclosure for the last 2 years, and I've really been covering, movements to make housing a human right. And so to see a development like this massive land grab, this exploitation of people's crises in order to turn a profit on Wall Street, it really shows me that we haven't learned a lesson from the 2008 housing crash. It really shows me that we are continuing to see housing and land as a speculative commodity that could drive the economy rather than a basic human need, and as such, a basic human right that everybody really needs to be insured and entitled to. And so, to me, it means we're really moving away from any sustainable, long-term, and just structures of housing in this country.
All right. Laura Gottesdiener is a writer and journalist. She's the author of the book A Dream Foreclosed, which is available from Zuccotti Park Press right now. I've read the book. It's a good read. I recommend you check it out. We've been discussing her new article from Tom Dispatch and also published on Truth Out called The Empire Strikes Back, How Wall Street Has Turned Housing into a Dangerous Get-Rich-Quick Scheme Again. Laura Gottesdiener, thanks so much for joining us today on Voice of Russia.
Thanks for having me.
I'm Justin Mitchell, and you are listening to the American edition of The Voice of Russia.